you doing? Good morning, everybody. It's Uncle Bruce here from Creston, British Columbia, Canada. Defying the markets by wearing my red shirt today. I am daring the market to go lower. I'm daring it to go lower because we're running out of gas. I think we're reaching the lower end of the market. But that's just me, my opinion. We'll find out whether or not I'm right or not. But kind of wondering if we've run out of gas here. We'll see. We're still lower this morning on a bunch of our stocks, and maybe we start low and we end up higher because that's how it can sometimes work. When you get an oversold scenario, you get the first morning blowout, and then you stabilize from there, and the deals start to come around. Let's see what happens. What's the reason you believe GameStop should be over 200? Because I think it's going to go over 400, and I think it's going to go over 800, and then it's going to reach 1,000. So naturally, the reason that it will go over 200 is it's on its way to 1,000. See, you can't get there unless you go past the $200 level. It's in the way, but it's only temporarily in the way because then it just, But anyway, I have a feeling that there's a lot going on behind the scenes that we're just not being filled in on right now. I think GameStop is very busy. Very active behind the scenes with a lot of changes, a lot of projects on the go. We know the fulfillment center now, there's one being built in Reno. They got the one being built now in York, Pennsylvania. It's telling me these guys are spending a bunch of money, millions of dollars, to set up two new distribution centers, one for the Northeast, one for the West. They've got Grapevine, Texas, gigantic warehouse there for the South, and so they are covering the US of A. They've got a warehouse, I believe, in Australia. They have one in Ontario, Mississauga, Ontario, I believe UK. They are setting up for global distribution of their of product, and they're becoming e-commerce. They're going e-commerce, and when you become an e-commerce company, your financials are measured in a different way than if you're a brick and mortar. And I believe that as every month goes by, more and more leases are coming up for expiry on the existing stores that they have. And I have a feeling that more and more leases are not being renewed. They're just letting leases run out. They've already targeted their stores. They already know which of the GameStop stores will not be retained. They will let them go. Do not be surprised if on January and February of next year, a ton of stores disappear because they'll run them now until Christmas. They'll take advantage of one last Christmas go. They'll do a bunch of blow-offs of expired merchandise, blow a bunch of crap out of there, and then drop off another 1,000 stores. And again, every year, just dropping them off as they switch over to the e-commerce system, because this company is going to become Chewified, just like Chewy is a pet online entity now running profits and billions in market cap, much higher than GameStop. GameStop is going that direction. It's the same founder. The founder of Chewy is the shareholder of GameStop now, the number one guy, Mr. Cohen. And so the Chewification of GameStop is underway, right underneath our noses, happening as we speak. And a lot of this is really happening quickly, and we don't see it because we're not in those offices. But I tell you, I think they're busy. Bruce, just to be sure, you talk about options, not warrants. That's right. I talk about options. Yes, stock options for SPACs. Buy long-term contracts, long-term, next January or later if you can. Another potentially stupid question. Uncle, how much of an impact do you think automated algorithmic trading is starting to have on the market itself? This has been part of the market for 20 years. This isn't like today, yesterday, this month, last month. This has been going on a long time, and the debate has been raging for decades. It's still down to the bottom line. It's people's money we're talking about, not machines' money. It's people's money, and so there's a lot of emotion in here, and that will never go away. All right, there you go. What's the strategy behind selling deep into money? They are auto exercised at the end. There's no chance of the option expiring, right? At this point, to get exercised, why not sell? Well, deep in the money calls, if you have enough of a premium on top of that, that's the strategy. You will take your exercise price plus the premium now, which could be above and beyond the book value of the entire deal. That's what you're looking for. I wrote 5 days ago a GameStop call at 240, July 23rd. I got 558 for it. I can close now and give back 165. Should I do that and write a new call or wait a few more days closer to the July 23rd? Yeah, I wouldn't hurry about buying it back at this point. That contract will continue to slip, and you will be able to cash that in. So that's the way I look at it. Just enjoy the gain. You've got. They said you wrote 240 for July 23rd. You say. Let's take a look here. There we are. 240. Right now, that contract is sitting at $1.39 to $2. Lasted $1.50, right? So sold it for $5.58. It's now trading, and now I can now buy it back. Is that what you mean? You can buy it back for $165? That's what I was trying to figure out. I was trying to understand what you said. At $1.39 bid last I saw here. Well, I mean, you could do a buy up, like you could try to buy it at $140 maybe. See if it comes to you at $140, and that'll score you a nice little $400 something gain. Then you could take a look at another one. Maybe take a look at writing a 210 and bring in 270, something like that, 275 or a 205 might bring in $3, something like that. If you can buy one cheap enough, and keep an eye. I'm down on all my calls for the stocks you recommend, but they're at least 4 months away, and been buying them for the last 2 months on the way down. Have another $5,000. What do you recommend? Just keep checking out these calls. Cheap. Get them in, at the money, just in the money. This is where you want to be, because these are the contracts that will react the most, the quickest, the most dramatically, and get your handle on these guys. Absolutely. Yeah, I would, if you have fresh cash, I would move into the lower premium contracts, because you want instant reaction. The stock goes up $3, you want almost all $3 to come to you right away on these contracts. The shares go up to $20 a pop. The 1750s you got, well, they'll take care of themselves. They'll come back up again. But I want you to seriously make some money on these 1250s or 15s. The 1250s in the money right now by what, $3, three and a half. You get a $4 move on this stock, you're going to get $3.50 move on that contract. That's $3.50 to you right now in your pocket. So if you can pick some of those up, I would grab those. That will go a long way against the average costing on this 1750. The 1750s go up anyway. Obviously, they'll pop back up. They'll be worth $250 book plus premium. They'll be like 4.5 to 5. They'll be close to your 622. But you're going to make your money on 1250s or 15s. That's where you can make some good money right away. I mean, you're right at the money, in the money. It's absolutely going to come your direction. Anyway, it's just me. I bought a $75 put on Royal back in June for $526, Jan 21 expire. It's worth $953 today. When should I sell? Beautiful job, Nancy. I'm very proud of you. Beautifully done. The shares on Royal Caribbean down to $1.43 to $74.77. You're now in the money, and it's still falling. And it's just a matter of what you want to do here. You've got a nice gain. Nothing wrong with this gain. You virtually, not quite double your money, but close. This stock, the lower it goes, the richer you get. And I think this thing's going lower, not higher. I see more logistical problems coming up for Royal Caribbean. I don't see like unabated, unabashed, carefree buying now. That has come and gone. That's what moved it to 96. We're now into hard reality on the cruise lines. The hard, harsh reality. And that is that the startup costs for these cruise ships are going to be mega. And they can't make any money right now. Even sailing, they're only sailing at a third to a half capacity. They are losing money on every cruise. They have to give up most of the spots to people with credits. These guys are bleeding money and will bleed money for another year. And so the shares to the $60 neighborhood, $55 neighborhood is absolutely doable. At least let it drop off a little more, another $5, $6, $8, and that might take your contract to 15, 18. Nice return on your money. Sofi call 25 January. I will lose my money. Should I sell it now? No. Do nothing. Your stock's going to go higher. and you have until January. By the time January rolls around, this could be $50 a share. You sit here and get ready to buy your beautiful pimp outfit, because we are going to start walking around looking like this because of how much money we're going to be making. Rita, you are going to look so good when you get your own pimp outfit, making all that money that we're going to be making on our Sofi shares and GameStop and all our calls. Oh, we're going to be pimping big time. We're going to be looking good. I'm loving this. You just sit tight, babe. You're going to do just fine. Just fine. Get ready, kids. This weekend, oh my God, it's happening noon Eastern time for each class, Saturday and Sunday, live right here. And Bruce will be on the whiteboard just going. This can be great.